I was taken for a ride.
Robert Clark was living the American dream until he went to get a refinance of his home of 45 years. He told the company how much he made working part-time.
I was making around $12,000 or under a year. And they knew that.
But according to court records, someone doubled his income on the forms.
They did. I didn't change anything. It would have to have been someone in the office.
The change got the company big commissions and stuck Robert with a loan he couldn't repay.
I thought I was going to be around 300 something a month.
Then
they started threatening me with the foreclosure notices. I was just going to go down and get my mail one morning. I opened the door and I saw the piece of paper stuck up on the door there, and it says notice of foreclosure.
An American dream destroyed.
It made me feel pretty bad and thinking of losing everything. I'd have to live on the streets or in my truck.
Now meet Scott, a young professional shopping for a new condo.
I put a deposit down on a condo. They said, well, to try qualifying through our mortgage company, our preferred lender that they had.
But just like Robert, something happened to his application.
Looking over the documents and, find out that the income that I gave them wasn't what came back to me. What they were saying that I made a year was far more than what I actually make.
A coincidence? Two people who don't know each other, but they do have something in common, and something in common with thousands of other people here in Eastlake. Stated income loans, liar loans.
Liar loan is basically a stated income loan, and therefore the person can state whatever number that they feel is what they make a year.
Christian Peter, the CEO of San Diego Realty, is an expert on stated income loans and foreclosures.
A lot of the loans that people were getting into were stated income loans.
So were borrowers lying to get into $700,000 homes, or was someone else changing the papers?
A salesperson wants to sell them as much home as they can possibly afford because their commissions derived from that purchase price. It's a no-win situation for the buyer.
The result? The loan resets, the teaser rate gone, and so are the homeowners, foreclosed.
Banks are owning now the majority of the new homes that were sold in the last couple of years.
But back to Scott and Robert. They say they weren't lying, so who's cooking the books on liar loans?
It is a fundamentally flawed business model to be making $500,000 loans to car parkers.
Bob Simpson's been investigating mortgage fraud inside banks for years. He knows.
You don't make $500,000 loans to people who make $30,000 or $40,000 a year.
But all the lenders did, courtesy liar loans, and he says they knew.
You interview someone who is a hairdresser, and you can't figure out roughly what they make. You are either a conspirator with that person or are just terrible at your job.
He's found time after time loans changed by lenders to make everyone look rich enough to buy a huge home.
The two choices aren't good for the mortgage industry, either culpable or just asleep at the switch.
His view? Look for more foreclosures on liar loans and more lenders going under. Others agree.
The American dream in South Bay is unfortunately starting to crumble a bit.
In the midst of all those empty homes, there's Robert.
I'm not giving up, no way. I'm here and I'm here to stay. I'm getting a lawyer and I'm suing.
John Mattes, Fox 6 News.